North Carolina Realtors, what should you be on the lookout for when your borrower is going new construction and the builder's affiliated mortgage bank is going to be utilizing a massive credit from the builder, $10,000, $15,000, $20,000? How can you properly coach your buyer through the best way to utilize that credit? First, they should use the credit to pay all their actual costs, closing costs, prepaids, and escrows. This guarantees that at least that portion of the credit will be used to offset a dollar for dollar expense. If an attorney's fee is $850, you can use $850 of the seller credit to pay that, and that's actual money saved. Then they can get a quote for an interest rate based on whatever's left over, right? If they have $5,000 left over, then go to that builder's mortgage bank and say, okay, what's my interest rate? What's the best interest rate I can get with that, using $5,000 worth of points versus $15,000 or $20,000 worth of points. Now, out of the gate, the builder's mortgage bank is probably going to be aggressive with your client, encouraging them to use the points, right? They're going to talk about how low their monthly payment is going to be. The interest rate will likely be significantly lower than market averages at that time, and it could be rather attractive to have that really, really low interest rate. Here's the problem. The mortgage bank does not have to tell your borrower what their cost is to buy that interest rate down. So if they're going to charge your borrower $15,000, let's say they're going to take the entire seller credit and use that towards points, and they're going to reduce their interest rate from, let's say a market average is 6.75, and they're going to take it down to 5.75. It may not cost the mortgage bank $15,000 to buy the interest rate down by a percentage. It probably only costs them half much. So they're going to aggressively recommend that the buyer takes the points, because the buyer is going to end up leaving some of that credit on the table, and they're not going to utilize all of the credit. So first, take the credit, use it to pay for all the closing costs, prepaids, and escrows, guaranteeing a dollar for dollar cost savings. And then if there's anything left over, then get a quote on points and how much you can reduce the interest rate. If you have any questions about this or want me to coach you through or coach a borrower through this process, please reach out, give me a call.